And good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, August 11th, 2022. Again, another very interesting day. We did get our PPI report. We did get the unemployment or the jobless claims. And the market decided to turn tail and run, but not with the same intensity as it did yesterday. But the NASDAQ did manage to get up and give a good test to the daily 200 EMA. And it held. And today's high was, was 13,575. So we kind of exceeded that 200 moving average by 21 according to its current position. But what's more important is that not only did it exceed it, but that's not a break, because it retreated and then it retreated and then it retreated and it retreated. So the way that I'm viewing what happened after this number and after the opening and after everybody who thought they had to buy went in and bought, the sellers came in and made their statement. They rejected the level. And not only did they reject it, they continued to reject it to enforce their point. Now, that's how I'm taking it. Others may think of something different, but I'm going to bring this down to the 4-hour chart, open it up. Let's take a look. You can see it was go up and then for the balance of the session, go down. Now, granted, they decided and they just had to do it. They bought it back up $50 in that last, what I call overtime, right? The permitted additional hour after the markets close. They, in their interminable minds, they decided to come up with this plan. We'll give an extra hour for funds, hedge funds, for mutual funds that have a lot of redemptions and new money, et cetera, to come in and use that last hour to do their trades. And so within that last hour, I don't know if it was the funds themselves with the new money or whatever money they have, or it was just additional market makers, other traders, but they decided to buy up the market. And after reaching our low just above 13,280, they decided it was time to, or actually it was 13,200, I'll tell you right now, 85. And they bought it up to, and it closed at 13,346, almost 47. Now, that we see often. It's people covering shorts, it's people bringing in the money, it's people adjusting positions, it's people realizing after they've taken all of their trades and put them into a computer that they were too short and they didn't want to be short coming into tomorrow, et cetera. So all of that may have zero meaning or a ton of meaning. Now, what I would like to do, let's go down to that 1-hour chart and let's take a look. Again, I can straighten these out, but every time I move them, they move them back on another chart. So remember what I said, it's like what I look for when a market has reached a level and possibly completed the wave pattern. So again, I'm marking this as a 5. That's a pretty strong rejection. That was the follow-through rejection. We basically had an hour and a half of upside, and then, but most of it was rejection. So pretty much in my mind, the balance of the day after reaching that high, which again was within the first 30 minutes of trade, right? This, my clock is 7 because I live in the Pacific zone, is 10 o'clock. Market opens at 9:30. So by 10 o'clock, we'd reached the high and already sold off. These are interesting but important. So whatever the narrative was, it reached a level where those choosing the narrative and basing the narrative found it, oh, we reached our level, sell. And that's what it looked like to me. Now, what I look for on my hourly chart to give me confirmation And then also to support the downside move is I look for 5 waves down on the hourly chart. Well, as you can see, the best I can do right now is 3. So right now we're being left with an ABC down, with the market moving up off that level. Now that doesn't mean that it could not be 1, 2, 1, 2. And we walk in tomorrow or overnight tonight, they start pounding this market, because what it would suggest is that we drop into a 3-3 move. And that's just the beginning. We're just in the beginning. So I don't go too fast on trying to interpret what I'm saying. If we are in the next down cycle and it happens to be the minor third, which is view number 1, right? I'll go back out to that daily real quick for us. If it's the minor 2 and we're dropping off and to begin a minor third wave, I'm looking for an initial on my hourly 5 waves down on the hourly chart, countable. And that would include that third wave breaking into its own 5. I want clean, the wave 1, the 2, wave 3, discernible 5 waves within it or more, and then a 4, and then a 5. So this is going to take maybe until next week to start to really unfold. Now, as it is left, the only way that I can truly be of any service to say, what can we expect for tomorrow? Right now, I would expect the way things are being left, that the market will again turn lower and start to sell off again. And where do we have any supports? Well, I'm going to go by moving averages right now before I add the Fibonacci. Moving averages tell us we have the 50-period moving average on an SMA, simple moving average, right here at 13,271. Then we start to drop, and then we have the 200-period SMA at 13,166, the EMA on the 200-period at 13,124. That still leaves us above 13,000. I want this initial 5 waves to come down and break below 13,000 and essentially break below 12,961, which happened to be Tuesday's low. Now on Wednesday, we hit our low early during Globex, and then we had that big rush, and then we had that follow through buying, and they weren't going to be fooled twice. You see, that was this whole thing. We won't be fooled twice. We're buying it anyway. And that actually was buying on the number. Actually, maybe that was the number. And then this was the start of like, well, we don't know. And then this was like, okay, our markets are open. Now we can push. Because there were people who said, we will not be fooled twice. We're buying it right away. And then it was reached the level. Boom, we're done. Sold. Now, this is a clean 5, right? 1, 2, 1, 2, 3, 4, 5 of 3, 4, 1, 2, 3, 4, 5. It's a clean 5 up on the hourly. This is the type of pattern that I'd like to see coming off to give me confirmation that this is done and we are now beginning our next move down. Now, go back out to that daily chart. What could that move be? Number 1, it could be a minor third wave. And within that minor third wave, there will be 5 waves of minute degree, a 1, 2, 3, 4, 5. So same plan, we would be impulse, we would be back on a third wave down, puts us back into trend. I still say the trend, the longer term trend is down. Contrary to popular belief, contrary to the pundits, contrary to all of the commentary, which is trying to paint a very rosy picture about what's going on in the markets, what we're doing and how forward thinking we are. We actually go out 6 months, et cetera, et cetera, et cetera. It's like horse manure. Right now, it's a narrative that's being spun against reality. And we had 2 reports that showed a little bit of a contraction in the inflation. 1 month, we had a contraction, primarily because crude oil prices have started to come down. But look at where crude closed, just under $94 a barrel. And we're peeing in our pants because, oh my God, inflation's under control now. Okay. I don't know about the rest of you, but I happened to have a break today and I took myself to the grocery store. I thought, well, I just need a few items. But what I needed and buying them all on sale, still here in California, was $100. I didn't fill the shopping cart, and I certainly didn't fill all the bags. Inflation is still real, and it is real on the producer level. And how do I know? Because I went and bought food. And some places, the gas prices are dropping quite nicely, quite rapidly. But I don't think that that lasts unless all these problems have been solved. And we're not getting that type of evidence yet. So it's trying to remain calm, but at the same time, we have to come in and we have to trade. We don't have to, we choose to. So we want to put on positions that are going to make us money. We want to be able to follow the market. Well, I'm telling you, don't be bullish, don't be bearish. I continue to preach that one. Do not take any directional bias with the market. It sets us up for disappointment because they got their other plans. So why do I then use Elliott wave? Because it wraps around parameters around what I can expect. And it wraps parameters around, if we are finished with this little rally, here's what I expect and look for from the market to give me confirmation that that's the case. Now, I'm going to drop back down. The other part that it could be, right, that I'm running still side by side, is that indeed 11,068 finished the intermediate C wave, and in turn, the primary degree A wave. So what does that then say? We're in a primary B wave countertrend rally. What shape will, or form or structure will that rally present? An A, B, C of an intermediate degree. So again, what could this level have completed? And again, I need confirmation from the market, is that it could have completed a minor wave C, that would be minor A, minor B, minor C, intermediate wave A, setting us up for an intermediate B wave decline, which will come in an ABC and not be expected to drop to a new low below 11,068. Here's where the big difference is. So it's going to take a while. We need to see these waves form. 5 waves down just gives me a little bit of stronger confirmation that this high completed either that or that. Then I need to see how it all develops out. And essentially, I could get a 5, a 3, and a 5, and still be running these two side by side. What I would need to see for one to take over the other is for it to break below 11,068. Now, people say, well, what about an irregular B wave inside the B wave? Possible, but if it's going to be turned into an irregular B wave, I think it'll be on a primary level, and that would suggest that we go up and we'll break to new highs. I'm not even going there right now. I'm not even going there, but it does sit out there. It'll be dealt with if and when we have clarity on which of these two counts is actually playing out. Now, again, basing that, and I'm looking at all of the hotspots around our globe with the economies, not just our economy, but the global economies, what's going on continually in the Ukraine, what the saber rattling over in the South China Sea between China and Taiwan and now the United States. What effect is that having? Then plus just inflation. Inflation, not just in our country, it's inflation that's kind of spreading around the globe. How that's going to have an effect. It takes a lot longer than a few months for inflation to be dealt with and to rescind and to go back. It isn't just a momentary thing, not at these levels. If it was momentary, we would have seen a blip in the price of bread, a blip in the price of gas, and it would have been over and we would have returned back down. It's not a blip. Price of oil has been on the rise for quite some time. It's not a blip. The supply chain got disrupted due to of many factors. It's not a blip. So the narrative that's being spun, that to my mind is the blip. Now, I could be 100% wrong, but this is what I stand on. And people may disagree, and I welcome that. But I'm not seeing the evidence other than pundits saying so. And the yield curve becoming inverted, which, by the way, if anybody paid attention today, the long bond, the 30-year bond, was down over 2 points at one juncture. Why? Because the 30-year bond auction yielded higher. They didn't continue to drop. They yielded higher. Oh, so this yield curve inversion was a blip? Possibly. It's not all said and done yet. But when you start to see the cracks in the narrative that's being spun, pay attention. Make your choices wisely. So for tomorrow, I'm seeing the potential that they look. I'll tell you what. Here, let's just take a peek. Oops, that's the daily. I don't want the daily. Go back down to the 4. All right, so now I'm going to open this up. Now, look at this. Rejection, bought it back up to a new high. Rejection, bought it to a new high. Rejection, took it to a new high. Rejection, took it up. We have seen this thing rejected, rejected, rejected as it flows higher within the context of a counter trend move. So eventually we're going to get, if that's the end, this rejection should just go right on through. You can, but we're not at that point yet. We came down on the 4-hour chart and tested the old 20 moving average. Held, recovered. I'm going to go out to the daily chart. We went up, we tested the daily 50. We went up, we came back through it. We did not hold, we did not close above it, so it does not put out a positive signal on a daily chart. In fact, the slide off of it lets us know that this holds firm. We saw a little bit of the lessening of the steepness of the rise of our other moving averages today. Could that suggest that we're turning? Yes, it could. But I intend to leave open the potential that they'll walk in tomorrow and go like that, the heck with it, guys, and just take it and take it and take it. Again, this was Globex, Monday to Tuesday. This was Globex holding it. This was us and Globex. Now we don't have anything left that we can go, see, everything's wonderful again. That's now we're done for right now. And now we got to go back to, so now we just have to deal with reality. Now, we could flounder around, we could sit here, whatever. I don't think that's going to be the case. And here's why. Tomorrow is, guess what? Yet another expiration. And a lot of it was built in to what this rally and this rally early did. It pushed a lot of these stocks up and over strike prices. I stand by and tell you again that when the markets move with speed and through strike prices, it forces, you don't have a choice, it forces adjustments of positions that are going to expire the end of that day tomorrow. The end of our trading session, bell rings, expiration is now done. That's the price. And you get the choice to go like, well, now we got to make a decision. Do we exercise those or do they get auto exercised? So adjustments will be made. So I expect there will be movement. And if the sellers all swarm in, boy, it's going to upset the apple cart for a lot of people who are looking at particular levels for these options to expire. Apple got above 170 today. That was just really go, because what do they got in their mind? Apple's the best thing since sliced bread, and we're going to new all-time highs above 180. And I have to tell you, look at the chart, it's like, yeah, that's possible. until it does a turn, but they're not letting it come off very far. All right. Then we have Amazon, going to hold 140. Google wanted 120. Don't know if it'll happen. Meta was looking at 180. Don't know if it'll happen now, but they're not willing to let them go. So they tell you, it's like they're still looking as if this thing goes up, then we'll let it expire. So we may have an update tomorrow, and they'll resume next week in terms of starting to unwind the whole rally. So I don't know. So tomorrow we have expiration. Right now, we are sitting between the 50 and the 20. So the hourly 50 got broken today. And we got a little bit of a down, bing, bing, and then they retook it. And it closed above it. And they knew that they had to get it closed above it. So if they wanted to keep an upside picture in place, do not let this thing drop below that 50 SMA. That'll really put the pressure on the sell side. Or will put the pressure on the buy side, excuse me, because it'll invite additional selling. It'll be another trigger, as will all the rest of these. But now we can start going down and we can start taking a look. Look at the 30. 50's up here. Now there's one that got caught, right? Comes down, breaks, comes down, breaks, broke the 20, boom. Comes over, breaks the 50, boom, breaks the other 50, boom, boom. And then this guy did it down. It's hooking ever so slightly. That's not strength. A hook is a hook. It's slightly hooking. The 8 looks like it wants to turn. The 50's stoic, so's the 20, so's the other 50, and so are the 200s. Flat. Look at this thing. It's like almost as somebody drew a horizontal line there. Flat. That will be support coming off. A break will really, I think, upset the apple cart and turn things much stronger. So maybe we'll have a quiet. Maybe they're going to try to get this thing back up to where they can get their numbers for these individual stocks that are getting ready to expire. One of the ones that really surprised me, take a look at this, NVIDIA. NVIDIA traded at 182 today. Now, 2 days ago, they warned and said, we're not going to be really producing results of that our net revenue was $8-point-something billion. We're now closer to $6 billion. And I'm going to tell you, that's the magic number, billion. So was it a little bit overboard on somebody's part on running whatever model they ran? So they came out and said that drove the stock down to 170. Actually, it was below 170. Then we had yesterday's wonderful little consumer price index, and this stock, instead of being down $11, which it was on Tuesday, on Wednesday, it was up $11. And today, they took it up another 3 or 4. Maybe it was 5, I don't remember. And it got caught. It got caught. But see what they did? They're already stepping in to buy it. Now, so let's be cautious. What I'm looking for is a continuation to the downside to finish and put in 5 waves down. Again, this is a 30-minute chart. So 1, 2, 1, 2. And it looks like they're going to try to open this thing down ever so slightly. Right, lighting up around 345, close to 46.75. So, it's not going to be much. There we go. It's down. But they're going to turn around and buy it right away. So let's see what happens and expect either side. So upside, here are resistance on the 30-minute. And if I come back out to the hourly, we've got resistance at all these points. Right now, we got resistance at the hourly 4, we got resistance at the hourly 8, we got resistance at the hourly 20. After that, we have resistance at 443 to 450, just all the way back up. This actually, that 200 up there at 13,554 remains valid. It did not break. Went above it, came right back below it, closed below it. So I'm not including additional Fibonacci's coming off because I'm using the moving averages right now. And I will follow the price action tomorrow, which will give me points of control value area, high and low, extended. Now, again, I will say, as it was coming off, a lot of the extended or the naked points of control and the naked value areas or extended value area got touched, got hit. So it took away a lot of levels already just in today's trading. So we'll see what develops tomorrow in terms of those particular additional on the way down would be pause points or break points that would cause additional hard selling. So that's kind of the picture for today. Stay alert. I know it's been a busy week, a hard week for a lot of people. Today was another day of some pretty solid, great trading. So it's right up there again with, producing some nice profits, profitable trades. I have no idea tomorrow. We could just open up, stay right here, and then the end of the day, do a bebop higher. Now you can just see, they're just going to try to take this going, take it up and see what happens. But it already opened up quite a bit, and now they're already coming back in and taking it down. In any case, have a great trading day tomorrow. Expiration, no major numbers, no major reports coming out tomorrow. So we'll see what the market wants to do. Stay open. Do not have a bullish or bearish bias. Try playing the price action against moving averages, against the order flow market profile. Have a great trading day tomorrow, and our next update will be on August the 14th on Sunday.